let me be clear, because we think that they do 50 and then they pause, because GDP numbers aren't bad. Productivity looks like it's actually pretty good.
Ruchir Sharma said that in the FT today.
And you look at the labor numbers as they're really mediocre. It's sluggish, softish. But, as you know, I was at Lehman's in 2008. This is not a 2008 type of labor market. That's not a April 2020 labor market. It's a mediocre, sluggish, poor labor market where, you probably should get closer to neutral, but nothing's falling off a cliff.
The chairman has talked about the oddness of that and the challenge of having a market like you describe. How much closer are we to figuring out why it is that way and why it continues to be? Is it just the simple sense of ambiguity about policies and their effects? Is it, as you hear from Scott Bessent or Kevin Hassett, things will take time to equilibrate or work themselves out? What do you make of the labor market, the state in which it's in right now?
Well, look, if I want to criticize the Fed, I'd say that they spend 90% of their time worrying about demand shocks. Uh-huh. And here we are talking about productivity shocks, talking about labor market shocks. And there's a lot of ambiguity in terms of how you interpret numbers when they come in, because you don't know if they're moving, what shock is moving them. So I think that's the big issue that leaves things uncertain. Uncertain about how bad things are. So I think that, in some ways it argues that, you kind of know the direction, so you make a move, but you'd be very cautious. I mean, what if we're in 1997?
Is stagflation a word that is bandied about in the Standard Chartered offices? Is it something that you are thinking about or worried about at this moment?
It's always a worry, but, with labor markets so soft, and spending going to be soft, I don't think labor is going to be able to push wages up, So I think that,
He's
irrespective
so 1960s. He's so Yale.
Irrespective,
push pull.
Irrespective of the productivity story, I think that
Okay.
Yeah.
Darda with a brilliant essay this weekend, and he goes back to nominal GDP. And I get it. It's a conundrum. Do we have terrible economic growth but still buoyant inflation, stagflation, as Dr. Gura talks about here? Stephen Englander, is the real risk here that we get this wrong and we have dampened growth and quiescent inflation where nominal GDP dips below 5%, ginormous number, dips below, dare I say, 4% or worse? Is that in one of your probabilities?
I think that, we all talk about AI all day long. And I think that that's going to be the real decisor for how the economy breaks. That if it turns out that we're, partly because of AI or other factors, that productivity growth is strong,
right,
everything's going to be fine.
But the Fed doesn't have that luxury. We can talk about it. We can go Yale, bring in Simon Johnson up at MIT. Rogoff was on the other day. It's a bunch of bow tie stuff. The Fed doesn't have that luxury, do they, to ponder AI and productivity?
Well, they should.
But I know
and spend more time on it.
What is this, Bloomberg prescriptive?
Okay.
What do you mean should? Krugman was on once, and I couldn't get him to say the dreaded S word, should. Englander's doing it. What should got to do with it?
But I think, in practice, given the absence of knowledge, it just means that you sort of go slowly in the direction that you think the data are telling you. I mean, there's no straw here with which to make bricks. And you can critique the productivity data very easily as well. So I think that they sort of, you take a step, you see what happens.
Right.
You take another step, see what happens. If something bad happens, you stop or you step back a little bit. If it looks good, you keep going.
President Goolsbee wants to go. Yeah, go ahead.
I want you to jump in here and finish out the interview. We're having so much fun here, folks, with the academics of Dr. Englander. I really want to emphasize some of this stuff is incredible dynamics, moving parts. And David, off of that is this dreaded word ambiguity, which is we really don't know where we are or what's going to happen. Continue.
I will ask you to indulge me and do a little work for us here as we look ahead to this week of data. So we have these revisions. I'm curious how you're thinking about them. But also we had President Goolsbee on Friday saying he wants to see the inflation data this week. That matters to him. We've got to look at the inflation side too, he says. How important is that to you? How should we be thinking or framing the data releases that we're going to get this week?
Okay, I think the important thing about the benchmark revisions is we think they're going to be significant, maybe 750 to 1 million down. And the important thing there is there's no reason to think that things have gotten better since the March of 2025. As far as inflation goes, I think the real issue, so my shirt price went up because there's a tariff on shirts. I mean, you don't know how to gauge it. If it turns out that, say services inflation is heating up, stuff that is not related to tariffs is heating up, then there's a problem.
Right.